Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from our friend and colleague Erik Wetterling. Erik is the publisher of thehedgelesshorseman.com and likes to dig in deep on some of the resource sector stocks. Erik, it's always a wild adventure when we're investing in exploration plays because some of these have targeting and science and they can be swing for the fences plays. Some plays can have huge gains suddenly, and other stocks can put out information that underwhelms the market. We're actually going to start on a story like that with a company that's a solid team. It's got solid projects, solid targeting, Rackla Metals, traded on the TSXV under the ticker RAK. But they put out news to the marketplace on October the 6th, and the first three holes from their drill program hit very small intervals of around 1 to 1.5 grams per ton gold. So a lot of 1 to 4 meter intercepts. Wasn't really what the market was looking for. The stock had a big sell-off as a result, but it raises more questions than it gives us answers because we don't know what the other holes in the program are going to come back with. We don't know what these holes mean. We don't know what some of the mineralization on some of these holes is indicating. So when you look at results like what came out on the 6th of October from Rackla, what's your response as someone that's been following the story closely and you get a batch of holes like this that underwhelm the market?
I mean, first of all, had to reread the assay results like 3 times because I couldn't believe them in a bad way. So I was expecting the later holes to be better since obviously you have more information. I mean, the first holes into anything, you don't really know where you are in the system and all that. So I was kind of, hoping for 1 gram per ton or something, around 1 gram per ton, but over considerable widths. That's what surprised me when I saw the intervals. It's like 1 meter here, 1.3 meter there, 1.5 there, with 1 gram per ton. And obviously, like somebody who doesn't know the story well, but saw how big the swing was, just asked in the forums, like, why did this get up to such a high market caps? Like, what was all the excitement about? So, I mean, the context was and still is. I mean, I can't say that the context was bad just because of the first three holes. The context was great, like hundreds of meters of high golden talus samples, really good channel sample, 38 meters, I think, or 1.8, or 35 meters, 1.8 grams per ton. Visuals in the core, good vein density, a lot of bismuth. There wasn't any visible gold, and that was always the weird thing. So it's like in my head, this is either going to be freakishly good or freakishly bad. These results here are freakishly bad in that context, of course, because this isn't anywhere close to economic in that part of Yukon. But it also means that, okay, with this new market cap, they have 10 million in cash. What are the odds that the last 7 holes is going to turn around the grad target? I mean, is it completely dead? Again, these assays here are absolutely not good at all. Is it completely dead? I don't know. I mean, they note that there are still 7 holes to be reported, and some of these exhibit the highest vein density, strongest alteration, and greatest concentration of bismuth minerals observed in the core today. So the only my amateur geo hat on here is like the wind condition I can see for grad right now seems to be that there is extreme zonation maybe, because there are other high bismuth rich reduced intrusion-related gold systems in Asia, for example. They have lower tonnage. It's not Valley type or Fort Knox type, but much higher grades, like I think 4 to 5 grams per ton. So that's the only wind condition from here that I can see. I might be completely wrong, but that there is simply extreme zonation, where it's like where you're out of maybe the bismuth zone, which scavenges most of the gold, almost like a boiling zone for a low sulfidation system. If you get out of that, it's all depleted. There's no gold. If you're into it, that's where all the gold is. And I'm not saying that's the case. I'm saying that I guess that is one of the few wind conditions that one would need at this time for grad to eventually become a success. Or maybe if that's the case, maybe they'll tag into that in the 7 holes. I don't know. I'm not, pounding the table because it's down 74% or whatever it is. I'm not sure myself is like what to do because obviously it's new and all that, but you have a completely different valuation these results are way below expectations. So it's a completely different case.
It is. And unfortunately, that's because the drill results are the drill results. They are the true truth machine. And look, Erik, none of us here on this call are geologists, right? So that's almost why I try to, in a way, ignore or discount a lot of what this targeting and surface work, especially early on. And this is the first time drilling this project, this area for Rackla Metals. I try not to get too much into the weeds on this targeting work because, quite frankly, we've seen successes and failures from what looked promising and some areas that just didn't look promising. Some of the best discoveries have been made by people drilling simply wildcat holes in different areas. So that's why, not being a geologist, again, really try to stay away from trying to put odds on what drill results look like when we just don't know what's underground. But this asks the bigger question of a trading strategy. Whether you're in a bull market or a bear market, exploration plays really run on the back of assay results. And Rackla Metals ran from a micro cap company. About a year ago, they were probably a 20 million, even lower than $20 million market cap company. They were over $100 million market cap before today, before the results were released. And now they're back down to a $34 million market cap. And the question is, yeah, there's still more holes to come out. But from a trading strategy perspective, does this make you reevaluate in any way your trading strategy if you're holding a stock that runs up prior to assay results? And again, should you just take off a little bit of money to maybe just ride your position for free to play defense just in case this happens where drill results don't meet market expectations?
Yeah, I mean, there's a big difference between just going up in price versus going up in price even before assays with some, let's say, news releases. So, I mean, all else equal, if you buy something at X, it goes up to 3X with no additional information. That's just worse risk reward because there is no new information, not even additional context. You're just getting less upside from there with more risk to the downside. So that in an ideal scenario, or ideally, that's just worse risk reward. Whereas like Rackla has put out news along the way, which basically, I was going to say, kind of confirms the good looking context in a sense. There's like, okay, we're seeing good vein density. And when we're drilling another area, for example, when you're kind of honing in on where you see more vein density, the following holes looked even better from a vein density perspective. So as all else equal, we don't know what the assays are, but that's not a bad sign. And that there's veining all over the place. So it's kind of, it ran up, but there was also a bunch of context along the way. So it was nothing like it was no de-risking happening. It's kind of started, and that's why I think the surprise was so big, because like the contextual news was like veining, the size of it, bismuth gets rich the further down they get in the system, etc., etc. It's kind of confirming the picture. It was getting filled in, let's say. So up to these first assays, I mean, I had no reason to believe that. I mean, if it's going to be bad, that it's going to be this bad in that perspective. But of course, in hindsight, it's always easy to say I should have done this or I should have done that. I mean, I don't like other failed exploration cases like Condor, for example, with Pucamaya. I don't regret those bets at all. I would do them again because some also work out. It's like Goliath is one where, hey, early stage, but the context is they have this outcropping mineralization, and that turned into a giant system, and that's up 10x or something. It's simply, you can't control everything. You just have to make some kind of guesstimate about risk and reward, and there's simply the ones that work out simply has to pay for all the ones that don't work out. And you can't really be a perfectionist, because in the end, even though a lot of people say stuff like, oh, I told you so, or I knew, whatever, they didn't. Nobody knew.
I think that's a great point, Erik, that nobody really knows what the results are going to be until they come out. But it is different when a company has a drill program and not nearly as much news flow on the targeting and the early stage exploration work, because the sampling of the talus and the vein density, that all is early stage exploration work. It's just not the same thing as what you're going to find at depth once you drop a drill hole into it. But I'm curious what you would do in the aftermath now, because like you say, the company still has $10 million. They have enough budget that they could go drill something else. They went from price for success to price to failure in just one day. And the truth is probably somewhere in between the two of those things. So they still can do work with the money they have. Do you think that the grad project, well, I guess we still are all waiting on the next 7 holes, but do you think that the grad project still has potential, like you say, in those bismuth areas where you would continue to maybe even add to a position here, or would you just hold what you have at this point? And then they also have other properties. Do you think it's likely that they could rotate to other properties? So what do you do with a company like this if somebody's listening to this call and they're holding Rackla and they're down 78% on the day? Should you hold because it's a competent team, they've got cash, and they have other opportunities?
I mean, that goes down to what your opportunity cost is. I mean, do you know something that's whatever, even more appealing, let's say? Because I'm personally, I'm not thinking that, this is a for sure. I mean, I hate selling low, don't get me wrong, but it's like, am I doubling down here? No, I'm not doubling down here because I need some more information. I mean, one could say that, hey, what are the chances that the last 7 holes is actually going to revive this target? I mean, there's a percentage chance of that because anything can happen, as we just saw today. What the chance is, I don't know. Maybe I'll sell some and be ready to jump back if these last 7 holes deliver and it opens up 100%. And I missed the first 100%, but all of a sudden it's like a rediscovery almost, or like version 2.0. Otherwise, yes, depending on what valuation they are, they could be seen as an early stage or back to an early stage exploration company, even if you take away grad and they have 10 million. Can that work out with time? Of course it can. I mean, they're out there. They found this Manta target, for example. But then it's like that's a completely different case. I mean, why I was excited about Rackla was the grad. How quickly, if that's as good as it looks, how quickly they can prove up an absolute monster given the footprint. So that was like 95% of my case for Rackla. And I'm still waiting because there are 7 holes left, and I'm kind of confused with these results. So I guess in another case, I might have a better answer, let's say. Right now, I haven't really made up my mind what do I think, but I know so far I'm not doubling down here. I want to hear, maybe some good explanation, maybe this theory of mine or other people have about scavenging, maybe a bismuth rich zone. Maybe someone smarter than me tells us that that's the case. Maybe I'll add a bit in that case, but right now I don't have a strong opinion one way or the other, and I have no real problem selling anything if I hate selling low, but that's also a mistake if you can't sell just because you're down on it because I got to get back to even. I mean, if you have an even better case with better risk reward, I mean, then you should sell even if you're down. But yeah, to sum up, I'm not 100% sure what I'm gonna do. I'm waiting here for some more news. I think. I mean, some insights from people who know better than me. It's like, what are the odds here? Is this absolutely killing grad, or is there some chance left? Obviously, the last 7 holes will also tell a story without any. I mean, that's not commentary. That's just as a result. So yeah, I'm open. I think it could get volatile.
Oh, I think you're right on that. It's already quite volatile. And look, quite frankly, yeah, we'll wait for those last 7 holes. And then the big question being, where is that market cap value then? You always talk risk reward. So if the company has 10 million now, it's trading at $35 million market cap. What's that 20 to $25 million valuation that it's getting? And what's the upside from there? What do people attribute it to? We'll follow up as more news comes, but it sounds like it'll still be a little while until we get some more of these drill results. Erik, look, there's a lot of other really good stories going on in the sector. A lot of stocks are moving higher. Gold is almost at $4,000. So any other exploration plays, which again are so news driven, that have your eye right now, preferably more in the positive aspect?
Yeah, I mean, West Point Gold released some really good assays, especially for a type of target they have in Arizona. And I think, I mean, their Tyro main zone, I think that's probably already a mine. So everything beyond that is kind of free upside in a sense. So I think that's a quite asymmetrical risk reward in the sense I don't see that as a high risk story. I would say probably medium, maybe even to low risk, or for a junior perspective. They have quite a bit of exploration upside, so that's not one where you're going to wake up probably and it's down 75% because it's hard to drill away what they've already drilled. Also with Altamira, I would put that in also the medium to maybe even low risk category, but with a lot of upside. I mean, they just announced that they have intercepted 2 additional porphyries while drilling 2 of their 11 regional targets. So there for sure looks to be that they have a near surface porphyry district with a lot of targets. And we know that they had deep hole at Maria Bonita, which we're still waiting for assays, and it's down to 500 meters, which could double the depth of that one. So it's like, and they got a trial mining permit up to 100,000 tons per year. So that's one I like, because at these gold prices, even if you have a small trial mine with low capex, that could make the current market cap look, kind of okay value just from a trial mine perspective. And then you have the potential for, let's say, huge tonnage like 0.3 to 1 gram per ton porphyry sitting near surface, which would, hopefully would get you into a Perica 2 type scenario where you just have a shit ton of low grade material with good metallurgy, and you could have one, not probably the highest grade mine around, but it's Perica 2 is Kinross flagship operation today, and I think they're mining 0.38 grams per ton. So if you have enough of that stuff, you could sure produce a big mine. And I simply think that, what they already have is pretty much underpinning the current market cap. So I get the blue sky exploration for free in that case. Again, not one that I'm expecting to one day wake up and it could be down 75%.
All right, so kind of a couple different options there for people to look into with West Point Gold and Altamira, 2 different companies, 2 different areas, working on 2 different kinds of projects. But exploration's a wild game, and we're all part of that and speculating on these junior companies. But it always comes down to, can a company continue to put out good results and de-risk a project and show that there's value creation on tap? Sometimes that's done with the drill bit. Sometimes that's done with multiple drill seasons. And like you say, even as you go into development and trial mining, there's different value levers that these junior companies can pull on. And we appreciate you weighing in on a couple of the stocks on your radar this week. For those of you listening in, if you want to follow along with Erik, definitely click on the link below in the show notes. It takes you over to the hedgelesshorseman.com, to his website, where you can follow some of his company write-ups, but also watch some of the YouTube videos where he does deep dives into the sector and some of the sector news. Erik, as always, it's great having you on the KE Report, and looking forward to our next conversation.
As always, consider me biased. I own shares of all 3 companies mentioned. Altamira and Rackla are banner sponsors, so twice biased.